Hello, good afternoon, and welcome to HYCM's webinar, FX Week Ahead, with myself, Giles Cochran, Chief Currency Analyst here at HYCM. We've got a number of exciting events this week, so I'm looking forward to taking us through a changing FX landscape, and there's a couple of particular events that we want to be getting ourselves ready for, so I'm looking forward to covering that during the session. Just as I'm coming in, just check everyone can hear me okay. Just say hello to folks as we're coming in. Hi, Sammy. Hi, Timon, Van. Great to have you on board. If you could someone could just click on the questions. Hi, Sammy. That's great. Thanks for letting me know that you're all hearing me. And as folks are coming on board, don't forget the disclaimer, just making it clear that all the different trading situations we're talking about, it's not trading advice. This is all about education, how to make trading decisions for yourself, and how you can go about, by looking over my shoulder, you can go about making some good decisions for yourselves as you look at the market coming up. This week we are looking ahead, and before we look ahead, as always, we want to look backwards, and we want to understand the context of the market, how all these events are featuring, in order that we can make sense of them, and also in order that we can see when events change, so we can take advantage of that change. The first event to obviously remind ourselves is that the US-China trade war is carrying on in earnest at the moment. This is something that's been going on for a couple of weeks now, and the next round of US-China trade talks are in flux. So the talks have basically stalled as a standoff between US and China has developed, and both countries now have kind of a step back from agreeing on talks, and the tariffs have been raised from both sides of the argument, and it's really uncertain at this stage what the next move is going to be. The market's kind of in a wait and see mode as we've opened up on the Monday morning, and this is just an event that's constantly in the background. So this is something that we need to be aware of throughout the trading week, that this can flare up, or this could begin to resolve kind of at any moment. So throughout the whole week, just make sure you're aware that you've got it in your mind that this trade dispute's still going on. Obviously, if the dispute breaks out worse and it carries on being a bad situation between the US and China, we're going to see more Japanese yen strength, we're going to see more Swiss franc strength, and we're going to see more US dollar strength. So just to be aware of that, that dynamic, and we're going to see the commodity currencies would weaken, so Australian dollar, New Zealand dollar, Canadian dollar. So that's just something to be aware of. In the background last week, we had the White House announcing an auto tariff delay of up to 6 months on EU car imports. So that was a little bit of a relief on the tariff front, because there was concerns, particularly last week, that the US is having tariffs with China, having tariffs with Europe, and that was really starting to weigh on global sentiment. We saw some real strength in the Japanese yen, and the concern was, the US is just fighting too many trade battles. It's going to really weigh on global growth. So that was paused last week when President Trump said, no, that we're not going to put any tariffs on EU car imports for the next 6 months. So that there was a little bit of relief. Last week we had a Brexit talks breaking down. Where it was at this particular point last week was the UK was having cross-party talks between the two major parties. The two major parties in the UK are the Conservative Party and the Labour Party. And what it was hoped is that the two parties could together agree on a Brexit approach that would be voted through Parliament. However, those cross-party talks have broken down, and the leader of the opposition, Jeremy Corbyn, he told Theresa May that the cross-party talks had gone as far as they could due to the government's present instability, and Jeremy Corbyn said, even more crucially, the increasing weakness and instability of your government, that's Jeremy to Theresa May, means that there cannot be confidence in securing whatever there might be agreed between us. So that really has gone as badly as it could have done. One thing to remember is that Jeremy Corbyn is a socialist and he's a Remainer. So Jeremy Corbyn would more prefer Britain to stay within the European Union. So he didn't really have a big incentive to make the talks work. And he's also under pressure from his own party and his own self-interest to try to force a general election further down the line. So even though the cross-party talks failing is not a massive surprise, it's just a further, evidence that British politicians are not working together to try to solve a Brexit dispute. So it's just worth having a moment to have a look at where we are with Brexit, because this has been changing. So we're looking at the next step. So on the 3rd of June is the next date for our calendar. And on the 3rd of June, members of Parliament in the UK Houses of Parliament will vote on a withdrawal agreement bill. Okay, it's known as the withdrawal agreement bill. So we're in a kind of pause and wait and see mode until that point in time. I'm not expecting much news to be coming out until we get to this 3rd of June. When we get to the 3rd of June, MPs will vote. It's widely expected that the bill will be rejected, okay? But if the bill was accepted by a majority and that passed through, then we would have an agreement. So then we would leave the European Union on the 31st of October, which is the current deadline for Britain leaving the EU, the 31st of October. If that bill passed, but then it was rejected later on as it went through Parliament, it would go back to be a rejection of the withdrawal agreement bill. So probably the most interesting outcome from a financial perspective is if the bill is rejected. So if the bill is rejected on the 3rd of June, we then go down to see a number of different options. And a number of different options would be a full renegotiation of the bill, the vote of no confidence in the Conservative government, a general election, another referendum, Brexit being cancelled, or a no-deal Brexit. So you can see there's such a range of options if that bill is rejected that's quite difficult, obviously, to predict what's going to happen. But Theresa May would almost certainly leave the Conservative Party leadership, and we'd have a Conservative Party leadership competition. And at the moment, Boris Johnson is expected to win that. So there's a lot of uncertainty for the pound at the moment. And if we look at the pound pair, let's just go and call up the pound US dollar pair. We'll have a look at where we are. Pound US dollar. Let's have a look here. Right. Just start looking at some key levels. Okay, we can see the pound has been selling off very heavily, rejecting the 100, 200 exponential moving average, and then just selling off very quickly. This has been on the realization that there's no progress being made. The cross-party talks have failed, so we've almost got that priced in now. Significant areas are obviously overhead resistance at the 1.2861 level. Prices just breaking through the 1.2768 key daily support level, and onto the downside we have the 1.2500 level, which is obviously a very key big level. So that's a key bottom for now, and we have a key overhead resistance at 1.2768 or 1.2861. But we're needing some more catalysts to really drive the pound US dollar at the moment, and so we're going to be in a kind of a wait and see mode until the 3rd of June. So I think the pound is going to be pushed around more by what the dollar is going to be doing in the next few sessions, especially with we've got the FOMC minutes coming out this week, and we've got a few Fed speakers this evening. So that's just a quick look at the pound US dollar pair. Just going out, we can see that on a big time scale, we can see that the pound is at historical lows. These are historical lows. It's 1.2500 level. So we really are at the bottom of the recent range, going back to 1999. So nearly 20-year range. We're right at the very bottom of that area. So that's why lots of analysts are seeing more upside for the pound. But obviously the Brexit risk and the no deal risk is so great that I don't recommend trading that unless you're trading with a very large stop beneath these kind of lows here. That's the kind of level, but I wouldn't recommend it because I think the shock, the risk of shock for the pound is still very high. So that's just a little quick recap on the Brexit latest, and just keeps us in the loop. Okay, another key thing for us to consider is the US-China. Hang on. Let's just. There we go. That's better. Another key level for us to look at is the People's Bank of China are set to defend the 7 level on the US dollar Chinese yuan pair. Now, at the end of last week, the People's Bank of China were reported by different sources to be ready to defend the 7.00 level. So they were talking that the 7 level was a level they didn't want to see the yuan being weakened past. And today we had a report via China's business news that a former People's Bank of China official said that China should not allow yuan to fall through 7. Okay, now part of the thing is that China wants to have a stable currency, doesn't want to have big shifts. It wants to keep capital within the country. So it's more interested in strengthening the yuan than seeing a weak yuan. Many people thought, well, a weak yuan would help China fight a US trade war by weakening the yuan. That would be really good for China. It would help with their trade, help with their exports. But that's not actually the case. The Bank of China doesn't want a weak yuan, and you can see here one of the former officials stressing that a devalued yuan only has a small net positive for trade. So looking at the charts, you can see that this is the 7 level up here, this overhead resistance. So price is currently now 6.942. So it's approaching that 7 level, and we can see that back in November and in August, as price was moving up to that level was defended. So just to bear in mind that we're getting quite close to the 7 level, could see a defense there. And if we look at, let's have a look. Yeah, well, we'll leave that for now. I was going to look at some technicals, but I think all you need to see is that overhead daily resistance and the big round significant psychological number of 7.00. So that level is looking like it's going to be defended. Certainly the bank is saying they're going to defend it. So I would expect some selling off that level on the first time. Okay, US, Mexico and Canada news. Both Mexico and Canada removed tariff penalties off agricultural products. So President Trump has told US farmers to resume business with both countries. We had some oil news out over the weekend, and basically both the Saudi Arabia energy minister and the United Arab Emirates energy minister have put to bed the suggestions that they'll be increasing production. So they're not looking to increase production. We also had President Trump telling Iran to bring it on, and President Trump said that if Iran wanted a war, that a war with the US would be the official end of Iran. So there was some really strong fighting talk between the two countries. And this was it. Trump said that a conflict with the US would be Iran's official end. So there were 3 supportive comments for oil. It was the Saudi energy minister said that the consensus was to drive down oil inventories gently, so wanting to have a less supply for the oil market. And UAE's energy minister told reporters that relaxing supply cuts was not the right decision. So in other words, wanting to keep those cuts up. So both Saudi and the UAE happy with OPEC's cuts, wants to keep them, and potential hostility between Trump and Iran. So looking at the oil charts, this is the US oil chart. Looking at it technically, there's one area in particular that interested me for a potential buy for today. Again, this is not trading advice, this is just education, showing people how you make decisions and how a professional trader goes about making decisions. So here is where I was looking to potentially buy from, the 62.42 level. It's a pivot point, it's a 200 exponential moving average, and potential areas to buy from support are below here. The 61 level is another interesting level. So that's where I'm looking at for today. This is a short-term trade. The oil market is going to be sensitive to headlines, cuts from OPEC or otherwise. But just for today, this level looked potentially good, and potential profit target taking up at that 64 level. So that's what I was looking at for oil. So looking back to, US-China trade war was the main issue last week, and potentially it could be the main issue this week. So again, make sure you're aware of that. Another big issue we had last week was the Australian employment data. Now this came out as a headline beat of plus 28.4 thousand, but the detail betrayed underlying weakness. And the increase was due to part-time jobs. I'm just going to call that up for us. Let me just get this for us. I'm just going to take a screenshot from this data point. It was on Thursday of last week. Yeah, there we go. Okay, I'm just going to take a screenshot so it's nice and simple for us. Here we go. Now, let's have a look. Here it is. Here's the employment change. So this is employment change. It came at headline 28.4 thousand, but a lot of those increases were part-time jobs, not full-time jobs. So it was a small beat, but the unemployment rate was worse than expected at 5.2%, and the prior was revised up to 5.1%. So more negative news. So taking the report as a whole, it was seen as being, undermining of the Australia's economy. And the case is now building for an RBA rate cut in August. So remember, in the last minutes, we've been following this quite a lot. The Reserve Bank of Australia have said that they will be looking very closely at employment data. We've had soft inflation, soft employment. We've had the Australian elections are now out of the way, so it does potentially look like a rate cut is coming. We'll find out some more details as we look through the calendar for this week, but this is just a flag in your head. It's looking like there's weakness potentially ahead for the Australian dollar. That was the Norges Bank. We won't cover that this week after all. Starting the week, we have Australia as the strongest in the overnight Asian session. And the strength that came in the Australian dollar was due to the surprise election result that took place when the Liberal National Party surprisingly won the Australian election. Polls have been putting the Labour Party ahead, but as it turned out, the polls were wrong, not for the first time, and the Liberal National Party is taking the unexpected lead. The official results are still to be announced. However, the Australian dollar rallied strongly on the news, and we had the Australian S&P ASX 200, which has reached some record highs for the last months and months. And I'm just going to quickly show you the ASX 200. We've got some really strong highs being made here on the daily chart. And a lot of these, this is Australian stocks. This is Australian stock market, the 200 leading stocks in the Australian economy. And they are 6424 at the moment, and it's making new highs as we speak. And you see that's the highest for a few years. A lot of those growth has been from the banking sector, That's because the banking sector stood to lose quite a lot if the Labour Party got in on Australia, as they were expected to do. So obviously when they didn't get in, the banking stocks have rallied strongly because they were going to be hit with greater regulation, fines, and so there's a strong sense of relief for Australia's banking sector. So just to be aware, that's why the Australian dollar is rallying at the moment. It's on that surprise election result. I'm expecting the Australian dollar to remain stronger for the rest of the session. So potentially that is a strong currency for the day, but I'm expecting that to reverse, and I will explain later why that is. Okay, the US-China trade dispute is carrying on. Remember, US-China make up nearly 40% of global GDP. Expect more risk-off trading in the coming week if this move continues. So it will result in yen strength, US dollar strength, Swiss franc strength, and obviously Australian dollar, New Zealand dollar, Canadian dollar weakness potentially. So looking at the week ahead, so there's not much going on really for today. We have some Fed speakers. We have Clarida speaking, and we have Jerome Powell speaking. So just to be aware that what they say about the with FOMC minutes coming up, what we want to see from the Fed speakers is, are they reinforcing the wait and see approach, or are they sort of moving to a more dovish approach? So looking at the Fed speakers, just be careful of trading the US dollar until the Fed speakers have spoken. That's an event risk to have on your radar. We then have the Australian Monetary Policy meeting minutes. That's Tuesday. And on top of that, we have not Jerome Powell, sorry, we have Governor Philip Lowe speaking, the Australian Central Bank's governor. So that's going to be strong indications for the Australian dollar going forward. So we want to see what the minutes are saying. We want to see what Philip Lowe is saying, and whether he indicates if a rate cut might be coming, because that's always possible. It's expected, and this is the sort of timing that we might expect to get hints of that rate cut. Now the Australian elections are over. Central banks tend to like to keep things stable in the economy as long as elections are going on. So all's to play for. These are the key events we've got for the Reserve Bank of Australia. You've got employment data coming in as a headline beat, but the detail will trade the underlying weakness. The case is building for an RBA rate cut. The key events, the minutes tonight, 1:30, 2:30 GMT, I think it was, and the Governor's Lowe speech is 3:15 GMT tonight. So for this evening, we are expecting a weakness in the Australian dollar. So let's just look at the Australian US dollar pair. And I'm just going to do a screenshot. Put some pivot points up here. So this is on the 1 hour chart. So here's on the 1 hour chart. Now, expecting there to be indication of a rate cut. This was the rally on the Australian dollar. Let's get that here. This was the rally in the Australian dollar from it gapped open. It was all on this surprise election result, and price is now starting to sell off slightly. We moved up towards that 6,950 level, couldn't quite reach it. We're now hovering around the pivot point. So there is potential for more weakness. So what the thing to look for is, this is a potential trade I might consider getting in early. Might consider just selling, putting a stop above that resistance point there and selling it down. If Philip Lowe is not as bearish as expecting, then you just take the hit above there. If he is as bearish as expected, then you can probably see price moving down to that next pivot point. So I'll be thinking about that for now. I don't think I'll be staying up for the event. But if you're around staying up for the event, this is an event that you could trade potentially live. Getting any hint of a rate cut is going to result in some weakness for the Australian dollar. So that's something that could be traded at the event. Definitely something to be aware of. And if we come to your chart, tomorrow, and you can see that these that Governor Lowe was negative. He was hinting at this rate cut coming up at the next monetary policy in June the 4th. Then would expect to see some Australian dollar weakness into that event. So that's a trade to take on. Okay, so that would be a weakening of the Australian dollar. That would be the weak currency. We always want to pair a weak currency with a strong currency. So that's something to look at. Looking for the FOMC meetings, minutes are coming on Wednesday. And again, there's going to be some inspection of the FOMC minutes on Wednesday. You can see here 7 o'clock GMT time to see the detailing of their explanation of low inflation. They've said that low inflation is transitory. They want to, the market want to drill down into that detail to see what it means. And it's just worth remembering that the coming trade tariffs from the US and China are only going to be coming online in the next sort of 4 to 6 weeks. So they're not going to impact yet, but it won't be too long before they start impacting. So again, looking at those minutes, and again, considering what Jerome Powell says that later on this evening, we need to marry those events together. But that's FOMC meeting minutes is one event to watch, to be aware of. There's nothing really with the pound CPI. Again, it's Brexit, which is just shadowing that. Don't forget Governor Lowe speaking on Wednesday, May the 22nd. That's worth being aware of. We also have, interesting, on Thursday, this is a very significant data release for Europe. It's the flash manufacturing PMIs out of Germany. It was concern over Germany's manufacturing growth, which really led to the euro selling off quite heavily about 2 or 3 weeks ago. So the market's going to be looking again at these PMI data out of Germany and looking for clues of either recovery or a further downside in German manufacturing. So that will be having an impact on the euro for Thursday. Be around for that, don't miss it. If we get a weak number here, that would be a potentially instant euro sell. That's what I personally would be looking at on a weak German PMI. So be aware, and then we could see further downside in the euro US dollar, obviously depending on the US dollar side of the equation with that one. But that could potentially be a very weak currency come Thursday. Have a look at that data point. On the Friday, we have core durable goods orders out of the US. That will be worth looking at just to see if the slowdown in manufacturing out of China and order of goods there has begun to impact the US. So that will be one to factor in on the Friday. Okay, guys, that's the main events that I'm looking at today. If I had to summarize it in a nutshell, it's the Australian, expecting that to be a bearish currency from here on in. I know we've got some strength today, not expecting that to continue. Looking for some negative sentiment coming out of the RBA today. And then on Thursday, it's the European PMIs, looking for the German manufacturing PMI. That's the really interesting one. It's the German manufacturing PMI, and it's seeing that weakening, which is going to result in more weakness for the euro coming ahead. Aside from that, in the backdrop throughout the week, we have the US-China trade war. That's going to be moving on. So make sure you don't get caught out on the wrong side of that. Obviously, with the Australian dollar, that would weigh on the Australian dollar as well. So potentially there's quite a few negative factors coming up on the Australian dollar. So that's just something to be aware of going forward, and something to keep your eyes peeled on as we go into the coming week. Don't forget that at HYCM we've got these various offers: the Essential, the Pro, the Premium, 3 different coaching models. That if you deposit these amounts into your account, you get the different benefits, and the idea is that you get one-to-one time with myself, obviously different levels of time with me depending on how much you deposit into your account. But just don't forget that offer, it's always there. And don't forget, you can also email me at giles.coughlin@hycm.com. Always nice to hear from you guys. I hope you guys have a good week, and don't forget, tomorrow we have the 1 o'clock to 2 o'clock GMT coaching trading workshop, and we'll be looking more at some of the events that we've already looking at today, and we'll be looking at that in more detail. I hope you guys have a really good week, and I look forward to seeing you later. Take care now, guys. See some of you tomorrow, and for those of you who I don't, have a good week. Thank you. Bye.